Well, it feels like I say this pretty much every show, but Nvidia is in absolute beast mode as it joins the 3 trillion market cap club. Apple as well. It's finding some good buyers as we push into the all-time highs of 199.62 ahead of next week's all-important developers conference. We're seeing a bit better volatility playing through in FX markets, certainly in the Mexican peso and the Japanese yen. And we look ahead at the ECB meeting in the coming session and looking at the risks around what's happening in the euro. But we also look ahead at the non-farm payrolls, next week's US CPI and FOMC meeting. We look at potential breakouts in Bitcoin. It's all going on. This is another trade-off. Well, good day to you all. I'm Chris Weston, Head of Research here at Pepperstone, and we're joined in 2 seconds by Blake Morrow from Forex Analytics. And we break down all the charts that matter, the flows, the news, everything that's going on in the financial markets, try and make sense of what's going on and try and look at the probabilities and where the skew of risk sits in these financial markets. Mr. Blake Morrow, I want to understand, are you now a political expert as well? Mexican elections, Indian elections, what's happening in the UK. We can look ahead at the first debate that comes out at the end of the month in the US as well. Are we a political expert as well now?
I am not a political expert. However, I did manage to play the Mexican peso. I didn't think that the outcome was going to be quite the way it was. President Sheinbaum, she's got a super majority, and I think that's got a lot of people freaked out from a carry trade perspective. You're seeing some of those massive carry unwinds from the Mexican peso, Japanese yen really coming undone. But it definitely is making a move. And, sometimes you get a little lucky. So you
do. Yeah. We won't talk about your percentage returns or your pips returns. I know what they were. So let's say dinner's on Mr. Morrow next time. We bump each other, but well played. You've got to be in it to win it.
Thank you.
Let's go into some of the themes that matter. Let's go and check the market pulse. Right, we're going into the scrum down, or what do you call it, a scrimmage over your way. We're going to sort of debate what's going on. I think we've got to probably start with the equity moves, haven't we, really? Nvidia last night, was a 3 trillion market cap now, second in the world. It's not a million miles away from Microsoft. The volumes we saw going from, the value going through there was about 6 times the next traded stock. If we have a look at the options market, which I think is the driver of the stock at the moment, we saw 94,000 call options, 0 DTEs trading for on 1,200 strikes. So for me, that's the major driver now. People are buying those slightly out of the money calls. It's going through the strikes. The market makers are having to hedge the gamma effectively, and that's just perpetuating the move up, similar to the sort of concept of what we've been seeing in GameStop. But I think people are chasing this one. It's just an absolute beast mode, and it's really propelling the equity story. While I've got the microphone as well. Next week, Blake, we've got Apple's developers conference, and Apple now is also giving legs to the equity story as well, because the developers conference next week is going to be Apple's official foray into the AI scene. They're probably the big market tech company that don't have a proper, well-known AI strategy, and that will be known next week. So people are buying the stock into that as well. So you've got Nvidia and Apple in beast mode. Market's going to fly on the back of that, right?
It is. And here's the thing. I talked about this, the semiconductor index when you were out and you were absent last week with Quasar. I was talking about the semiconductor index looked like it was poised for a reversal and was actually starting to trend lower from the 161% extension. Then today, the SOX blew up back to highs. Nvidia blasted new highs. But I'm going to call something right now, Chris. It's we got the boob top coming. No one knows what I'm talking about. If you saw the picture of Nvidia's chairman signing a picture of his picture autograph on a woman's boob, I'm going to call it is. We are very close to the top, and I'm going to call it the boob top. So
well, I like the logic.
Be known, Chris.
It is as goes Nvidia, as goes the market, effectively. So yeah, that is really it. If you take those 5 stocks now, the sort of the Mag 7, effectively call it. They have just literally been contributing most of the gains to the market. If you take those stocks out, then the S&P is up 13%, 11 to 13% for the year. Take those stocks out, and the market's up 6% for the year. So as goes Nvidia and these high cap techs, as goes the market really. So that's kind of the situation that we have at hand. So I wouldn't be short. I wouldn't be short Nvidia. It's a gamma squeeze trade that's taking place. It's a momentum beast at the moment, and I think I'd be I'd be long or out, but I wouldn't be shorting the stock.
I'd agree with you, but the thing is, just mark my words. Boob top. But what something that's happening right now. Let's shift gears over to the ECB and what's happening with the euro, Chris. Tomorrow we have the ECB meeting. It is so widely known that the ECB is going to cut tomorrow. If they didn't cut tomorrow,
fall off.
It would be absolute mayhem. However, if you look at the price action of the euro, or you can look at the dollar as a whole, the euro is really just nudged up against 109. It's nudging up against its highs. Pullbacks have been very shallow, and it looks like 110 is pretty much I almost want to say it's in the cards. All we have to do is have an ECB meeting that says, we cut rates. Now we're data dependent. Maybe it's a one and done. I really believe this, Chris, that any rate cuts that you see from central banks that are going to join the chorus of Bank of Canada today, Riksbank, Swiss National Bank, it's going to end up being more of one and done, because we still have very sticky inflation and growth in Europe starting to stabilize. So I'm not in the camp.
One and wait for the Fed to catch up.
Yeah, there you go. It's possible, but here's the thing. I think the euro is set up for a squeeze tomorrow, especially if the ECB talks. We get a dovish hike. What are your thoughts on the euro and ECB?
I don't think
tomorrow?
we're going to get. I think everyone's expecting a hawkish cut, to be honest, from the ECB, right? Yeah. Well, so don't sell the euro because they're going to cut rates. I mean, that's silly in my opinion. I mean, it's 100% priced in. There's absolutely every chance. I mean, if they keep rates on hold, then the ECB have got a massive credibility issue, because they pretty much all told us that they're going to cut rates here. If they don't, then you just don't listen to a word. Not that we listen to them too closely anyway, but they're going to move to a data dependent. They're already data dependent, but they're going to say, we're cutting rates here. The next rate cut is going to be conditional on the data. We're going to move meeting by meeting. We've got 60 odd basis points of cut. So another 40 basis points or so of cuts being priced in by the end of the year. They're probably going to meet that market pricing, maybe a little bit less. So I think everyone's expecting it to be what they call a hawkish cut. So you could easily see the euro rally on a rate cut, which to a lot of people new to markets would be like, that's a crazy phenomenon. That's not what they teach us in textbooks. But that's where the risk is. But euro dollar at the moment is a pure rates trade. The difference between say the 2-year German Bund and the US Treasury, we look at rates markets, but it's just a rates differential story at the moment. So I ask you, Blake, where are rates going to be? What's being priced into European rates and US rates over the next 12 months? What's more likely got downside? What could see more rate cuts being priced in than what currently is? And that's where I'll tell you where euro dollar is probably going to go.
And you know what? That probably takes us into our next topic, which would be with the NFP playbook, right? Because we're waiting at the end of the week. We're going to get some data coming in, and this is going to be a big one for us, Chris. How are you looking to play the NFP? Because I'm sitting there looking at employment going, I'm really looking at the unemployment rate. If it ticks up to 4%, that's kind of like my threshold for paying for the dollar. What are you thinking at this point?
That's right. Yeah. I mean, it's always a bit messy because you've got average hourly earnings, unemployment, and payrolls, and predicting payrolls is a thankless task. It's monkey business. But I think the simplistic thing for me is, and like where we're both going on this, is that we've seen some various labour market data points cooling down. If we saw a 4 handle on the unemployment rate, there you go. The dollar's going to sell off against the yen, Swissy. Against some of the high beta plays. And that's really the easy thing. Whether the equity market rallies on that, I don't know, but I would suspect the easiest play is going to be an unemployment rate above 4%, then front end yields go lower and the dollar goes down. It's probably gold rallies in that situation. If you get below 3.7% on the unemployment rate, then you get a stronger dollar. I mean, it's probably as simple as that. I should get back to you, Blake. I mean, I think payrolls is always a tough one to trade because the market looks at what it wants to look at. I think next week's CPI number is probably the bigger issue for markets. You agree?
I agree with that. CPI, because it comes in just ahead of the Fed, which is really going to set us up on how we're going to play the dollar. And Chris, I think the dollar looks very vulnerable right now.
Yep.
If you look at the sterling, it's up at 128. The euro's closing in on 110, 109, obviously, but 110 is where it gets really juicy. And then you got the Aussie Kiwi looking really bullish. The only dollar trade that's still holding up is against the yen. But how are you looking at the dollar right now?
Yeah, I mean, look, there's probably two-way risks. I mean, obviously we're at the mercy of data, and being at the mercy of data is always a tough one for traders. That's not really trading; you're just kind of hoping. But yeah, it could go either way. But I feel that we've seen the dollar index rejecting the uptrend. I think we probably have a chart on that. But we have had a big move lower in front-end yields recently. 2-year Treasury yields have fallen, and that's reduced some of the impact on the US dollar. But I mean, I think that unemployment rate is going to really set the tone in the payrolls. If we get above 4%, everyone's going to talk about the SARM rule and various factors, and that will impact the US dollar. The exceptionalism trade has been called into question recently. So, let's see. I mean, I think it's going to be fascinating viewing, and I think once we get that data, there'll be some great trading opportunities to react to that situation that will be lasting. So I think that's a good idea now to have a look at some of the setups we're seeing. I think that's probably the next best way to look at this. We'll have a look at some of the dollar moves later on, but I want to go straight to Bitcoin because it's at an interesting level. We talked about breakouts, but one that's getting a bit of interest from clients at the moment is, I call it a bit of a quasi cup and handle. Everyone's getting focused on this ETF, Ethereum ETF that potentially could be coming out anytime soon. That's not fully priced in, and that may see some love when that finally probably gets a blessing from the SEC. But massive inflows into the Bitcoin ETFs that we saw yesterday. I haven't really seen the numbers today, but massive numbers, $886 million, one of the biggest we've ever seen. And we're now testing those recent highs there, Blake. I want to buy the breakout. A lot of these times they fail, and you cut that loss really quickly. But I think this one goes higher. So I'm thinking through 72,000, through those recent highs. I want to chase that. I think you go to new all-time highs in Bitcoin on the back of that. So watching those inflows, they've been very well correlated to Bitcoin returns recently, and we're seeing really good inflows again. Not on a sustained basis across the different coins, across different ETFs, but more on a concentrated basis. I think this breakout's one that needs to be on the radar. Buy the breakout, in my opinion.
Yeah, and you want to see a big cup and handle pattern. I'll put that on a weekly chart, and then you see 70,000 to 70,000 building the handle right now, and it looks like I wouldn't want to be short. That's how I feel about it. Hey, let's take a look at the Euro Swiss, and that's going to be my first setup. And you notice I left the chart the way that we had them at the beginning of this year, looking for a move all the way up towards 98 cents. We ended up surpassing that in the most recent leg higher. Divergent relative strength. We saw a pullback. Pullback had to do with Swiss National Bank Jordan. He's been trying to talk up or stop the slide in the Swiss franc. I think he's done a great job. On top of that, we got Swiss CPI, but it's now come back to the levels, the 38% retracement. And if it can hold here around the 97 cent level, these are the levels that I wanted to be back involved again in the Euro Swiss. So for those of you that think that the Swiss franc, I do, just so you know, I think it still is going to be the short trade of 2024. This is going to be my second real go at it. Is I want to be long Euro Swiss around these levels because I think your risk is very manageable at this point. So I am looking for this dip to be a buyer because 38% retracement means it's shallow. If it's a shallow retracement, it usually means a continuation back in the trend, and in this case would be back in the upward direction.
Yeah, good one. I mean, I think from I've got the Swiss franc is that. We've got a meeting at the end of the month, 20th of June. The market's pricing 11 basis points of cuts. So, that's kind of line ball. The market's saying, on balance, we're not likely to get a cut now. Could they do it? That means there probably could be some juice in your trade if you start looking towards getting a cut there. And I think Jordan's comments as well around the currency moves are really important. We can talk about them another time, but the market now is giving a greater probability they keep rates on hold, and that sort of benefits your trade to an extent because if you do think they will cut. And let's go into Aussie CAD because I think this is a great setup. Which is the whole point of the situation there. You've got the market banging on the ceiling. We have literally been testing these levels, oh crikey, really for 15 months or so perhaps even longer. So we are at a major inflection point, and I've even got this on the daily chart. I probably should have put this on the weekly chart there, but for people who are looking at this cross, I think there's reasons to like the Aussie dollar from a rates perspective. They're probably going to be, in terms of the market pricing, they're going to be the last central bank to look to cut rates, and that one's probably going to be a 2025 story. We obviously saw the Canadians come out yesterday, and what we saw from Macklin is that they're effectively looking to do more going forward. The market saw that as a dovish cut, even though it was largely priced in terms of the cut. Yeah, he opened the door to more rate cuts. And if you put that relative to what we're seeing in Australia, even though we're seeing fairly subdued growth, the rates market saying, inflation's still too high, housing market's strong, and therefore we're not going to get cut. So there's nothing really to do on this one just yet. But, given the amount of times we banged on the ceiling, if we do see that breakout, we could see a new range established, and that could be very powerful indeed. So just the extent of how long we've been banging at the ceiling, a breakout would be very powerful.
My colleague at Forex Analytics, who Ryan Littlestone, he says it like this: if they keep knocking on the door, it's eventually going to open, and in this case, you keep knocking against that resistance, it might break. So a great one, Chris. I like it. The last setup is really, I just heard from a birdie that you guys are going to have the trade-off, Chinese trade-off. Is that correct?
Aye. Yep.
All right. Is the cat? Yeah. Did I just let the cat out of the bag?
No,
I don't know.
I think
I've heard it through the grapevine.
Yeah, it's going global. Yeah, Dylan Wu, one of our Chinese analyst, is speaking analyst, is going to be heading that one off. So looking forward to seeing that roll out. Be good.
Awesome. Well, you know what? This was a little bit of love to the Pepperstone clients out there, especially the Asian ones that trade the Hong Kong 50. Which is the HK50. And we've got a little head and shoulder pattern. I just want to give you some context here. This is not something that I trade, but again, this is a little bit of love to the Pepperstone traders out there. You notice the 618 retracement. That was actually that whole decline. We stopped there. That would be the head. We're creating a bit of a shoulder right now. And so anywhere from this 18,700 to 19,000 level, because they're not always symmetrical. It's nice. Symmetry is great if you get in the market. It doesn't always happen, but as long as we can hold below 19,000 and we're creating a right shoulder, then we might have a head and shoulder setup that actually takes us back below the 200 DMA on any breakdown. So just look at it as a setup. It is a setup, and for those of you that trade the HK50, that one's for you.
Lovely. Anyway, let's go to play of the day. Well, I'm going to keep it simple because I am a simple man. I'm just going to go straight Nas. It's strong. I'm long. I don't see any reason why this can't continue. Look, obviously we are at the mercy of Nvidia, and we're also at the mercy of Apple. As I say, we've got the Nasdaq, we've got the Apple Developers Conference next week. I think the market is renting Apple going into that. There's a real chance that you do get a buy the rumor, sell the fact in Apple after the Developers Conference. It goes for a couple of days, but that's going to be their first real number where we get the official situation with Apple's entrance into AI. And I think the market stays strong in Apple. I think we probably see new all-time highs. As long as that's happening and the market is chasing, we've got this gamma squeeze coming through in Nvidia, but you've got names like Broadcom, which have been strong. You've got Marvell looking to start working a bit better. Qualcomm looking pretty strong. All of these names are working quite well, and the momentum is to the back. A market all-time high. You can't get any more bullish on that, especially when we're seeing that range expansion on that breakout. Good volume playing through on the market. I like it. I like the market here. I think this trades higher. Do we go to 20,000? It's a bit of a long shot. Certainly we're not going to get that this week or next week. But yeah, I think the skew of risk remains to the upside in this one. I wouldn't want to be short here. I think we go higher here.
Keep it simple, silly. I like it. I like the KISS trade, Chris. All right. My setup is going to be the dollar index. And look, I'm going to leave it up to you guys. It's dealer's choice here. I think the dollar is going down. We broke through channel support. We broke through the 38% retracement. We're challenging and can't get back above the 200 DMA. And if you look around, whether it's the euro at 109, sterling at 128, Aussie dollar nearing 67 cents, Kiwi at 62 cents, even after the Bank of Canada and the BOC, still signal there's more rate cuts to come. The dollar still failed above 130 or 137, the dollar CAD. So you put all that together and the dollar index looks vulnerable. I think it's a short, and I think we can move down towards 104 and definitely towards, or eventually what I meant to say, towards 103. So like I said, it's dealer's choice here, Chris. I have some favorites. My favorite would be the Kiwi dollar. I like the sterling on the long side. I like the Kiwi on the long side. Both of them are approaching.
Stocky's looking good. Stocky's looking good.
Yeah, they look great. The Aussie doesn't look bad. Look, there's a lot of directions you can go here, but the dollar looks weak. And I'm going to say this before we wrap things up. If you look at the way the dollar reacted post .com bubble, the dollar went down even as stocks went down. I hearken these times that we're in similar to a .com period, whether we're in 1999 or 2000, I'm not too sure.
But let's say dealer's choice. Let's hope you don't get a pair of snake eyes. Anyway, thank you very much for everyone for watching today. We really appreciate it. If you can smack the like button, we'd appreciate that. Tell your mates, tell your family, get everyone to subscribe, pass the show round, and we'll see you back next week for more of The Trade-Off.